Hello, and welcome to a new episode with your host, Vinney Chopra. I'm so excited to have you here as we dive deep into the world of real estate investing, syndications, abundance mindset, and building generational wealth. We are excited to be in the top 1.5% of the real estate podcasts. Got number 11 actually out of top 50 real estate syndication podcasts. Thanks to you. Each episode, we bring powerful insights, expert guests, and actionable strategies to help you take your investing game to the next level. Whether you are a seasoned investor or just getting started, if you love what you hear, please take a moment to subscribe, leave a 5-star review, and follow me on social media so that we can never miss an episode. Your support helps us continue sharing valuable content with more people like you. Now let's jump into today's episode. Thank you. Hi there, dear friends. Vinney Chopra, Vinney and Beau Show. Beau brother right there from Las Vegas, and myself right here from the Bay Area, here in Black Hawk, California. I'm so excited. We're going to talk about something very special. Hold on to your seats. The key national forecast for this year, 2025, franchise output is projected to hit 936 billion, almost $1 trillion. Oh my gosh. Wow. And the franchise establishments will increase by 2.5% to 851,400 units. That's a lot. Employment in franchising is forecast to exceed 9 million people in just franchising employment. So there is a huge 213,000 jobs will be added on, and franchise GDP will grow by 5%. I know USA is looking at maybe 2% or something total, but this is one field I wanted to talk about so that I know Brother Beau is knee deep into franchising world, as he's a loan broker and also fantastic franchisor. He got some awards also. And let's pick his brain why franchises are becoming very popular, with baby boomers turning 65 every night, 10,000. They want to have a side hustle. They want to be passively investing or partially actively investing. Beau, how are you, brother?
Doing well. This is a great topic. I'm excited to chime in here. So, in an unstable economy we're looking like a recession, why are we projecting year-over-year growth in the franchise space? And I think it really comes down to this. I think finally people are really catching on that they have to take destiny into their own hands, and that is owning a business. And then a franchise has systems, processes, so people are more comfortable going from corporate into franchising. We're also seeing a big uptick of private equity. As real estate deals got a lot tighter, private equity is moving into our space. You've seen a lot of big acquisitions. Jersey Mike Stubbs, $8 billion acquisition. You're seeing a lot of private equity in the space. You're seeing a lot of real estate people in the space because everybody understands this concept. You should own real estate and you should own operating businesses. And if you can own those three with good tax strategy, you get the triangle method. So I think that's why we're seeing numbers tick up. And I believe, regardless of what happens over the next 12 or 18 months, if you take destiny into your own hands, you will be successful if you keep at it.
So true. So very true. We have covered in our show before also that the cost of living is going higher and higher with inflation, with all the goods getting. So people are finding the savings accounts are not as healthy as they would like to be. As the baby boomers are turning 65 into independent living and assisted livings that we cover a lot about, which I specialize in. The key thing is by having a side hustle. We always promote that so that you keep yourself busy, active. Of course, you can just go ahead and take total retirement. That's fine too, if you can afford to. But a lot of people in USA need to keep on doing this second job and ownership of a business. And that's what we are talking about today, franchising. The key thing, but I understand, Bo, is that to start something fresh, brand new, you have to learn the systems. You have to go to seminars. You have to go to all these different places. And then you have so much fears. Would this be successful? I don't want to put my foot in the wrong place and so forth. Franchisers on the other side, they have figured it out. They have the game plans, they have the systems, they have gone through the trail blazing, we call it, and you could just learn from them, from their mistakes, from their systems, and you could fit right into that at the most minimum investments and things like that, from what I understand. So the key thing is you are proving it's good to follow a proven system rather than inventing one. I say that to all my students also. Hey, whatever you want to do sometime in this country, in this world, somebody's done it. Somebody's built that mousetrap. So you got to just find out, just like we were doing, I think, in previous shows, stacking your economy. I remember we were doing this show where you could just reverse engineer is the other word, so that you could really start the business with lot more conviction, lot more fearlessness, and lot more expectation of profits and profitability if you follow a proven system.
I love it. Yeah, you nailed it there, Vinney. So that's why ultimately I think people are catching on, not going to get their desired results doing what they're doing today. So you have to take action. You have to take massive action. I was at a workshop yesterday online. This is what's called my Kolbe A index. The Kolbe A is, there's 3 parts of your brain. This is a cognitive part of your brain and how you work naturally. So I'm a 7283. So I understand I'm a fact finder. My follow through is a 2. So what that means is I would probably hire somebody to do a lot of the follow up and systematizing of, and I'm a quick start. 8 is a quick start. So I'm an idea person. So understanding who you are and your makeup, because we all have different skills, I think is very important. Understanding your skill sets and then optimizing your skills and then plugging in the parts that you don't have. So there's a business for everybody, or there's an investment for everybody, but you really have to research and understand what you're getting into. But regardless or not, recession or not, if you don't take the destiny into your own hands, you're going to be doing what you're doing 5 years from now and have regrets. So our show that Vinney and I talk about is really about just taking action, is to open your mind, take action, and dive into stuff. Obviously, make sure you understand what you're getting into. You probably will make mistakes, but that's okay. We all make mistakes. We all learn and grow. So yeah, ultimately, that's actually really good news that even with an upcoming recession, the forecasts are very strong. So if you want to build what I call an FU wall, actually I coined that from somebody else. That's a FU wall, means no matter what the economy is doing, it doesn't matter. Then you want to get into some sort of business. You want to not have a cap, an income cap. You want to take that, the governor on a car, there's a governor that only lets you go a certain speed. You take that off so you can have uncapped earning potential. So that's really why I like business.
So true. Again, remember what we want to decide. I think the key thing is, if I may stress on that one, I've come across so many entrepreneurs, so many investors who want to do something. But you know what, Bo? They don't take the first step. They don't want to educate themselves or dig deeper into. With AI now, you could dig deeper into, just say deep dive into this business, deep dive into this subject. And all you have to do is just ask ChatGPT those questions, and it looks through all the sources. Or Perplexity, we use that also. And Claude is another one. There's so many of them, right? The key thing is to take that first step where you say, you know what, I do want to learn as much as, and then hook on with an operator who has done it, or who can take my good money and put it into good use passively if that's what you want to do. Make sure that you look at the sponsors or the operators, what's their track record, who are on the top principals, and figure out what they have done. That's the big thing. And what you're buying. So it's not just the horse, it's the jockey on the horse. So it's the product, but then who is really the jockey that's going to run that project? If it's hospitality, like in my case, or senior livings and multifamily, those three have been the main things in my life. The key thing I find is that you got to take that step. You got to take action, get in an action mode, because that's when you say, you know what, I wish I had done it 6 months earlier or something like that. But get into it so that you will get to the next level.
I love it. Yeah, just take action. I guess is the end of the day. Getting into a business is easier than you think. Yeah. I'm helping a guy right now. He's under 30 and he's buying a $10 million business that's probably going to put in every year $1 million in his pocket. Seller's discretionary earnings with one stroke of a deal, right? Like, it's a game changer if you just get in and understand it. And you can use leverage. You can use leverage to buy these real estate pieces, to buy businesses. That's what makes it really strong. Other people's money, whether you're raising some of the down payment or getting SBA financing or some kind of commercial financing. Very powerful stuff that we do. And like this guy might not have got his deal done if he didn't reach out to me, because it was a very challenging deal. We haven't got it closed yet. We've got the term sheet and we're working on hopefully by June it'll be closed. And that guy's going to be, he's not even 30 years, 30 years old yet. Find a $10 million business that spits off that much cash flow. That's freaking impressive. They're out there though. There's all these boomers that are retiring. That's why we talk about assisted living. Great opportunities in that space. We talk about buying these businesses from these retiring boomers, buying real estate deals off of burnout landlords. Like, there's all these opportunities. And when recession comes, it makes it easier for those people that are in the game still. And that's what's going to happen. Where it's been a little bit tougher for real estate people, but your opportunities are coming back.
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? You know, I wrote this book a few years back, Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children. And the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor. Go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it. But I would highly recommend for you to get these, or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education. I'm so glad you said it, because you're right. As baby boomers are retiring and some of the BlackRock and they are able to unload some great. We came across 4 hotels this week. Today's Friday. We are and put the LOI on one with $500,000 non-refundable day one, because it's for 14.5 million. I'm going to say where it is, and it's a Marriott, and it will be with the PIP and everything of 1.5 million or so, or 2 million. It'll be worth $28 million, $26 million. What? it's just mind-blowing what kind of opportunities with my partners that I'm able to associate with. They are able to uncover so many great deals all over. Again, we are not selling any security or anything. When you are watching us later on, if you want to invest passively, and I'm starting a fund, new fund also, by the way, it's a cash yield fund. What? Cash yield means you get monthly payment of 10%, 11%, or 12%, depending on how much you invest with me passively, and we'll be able to give you 10% straight. In other words, it's ordinary income for passive investors, right? But we'll be able to give depreciation so much, the negative, that 10% will stay 10%. It will not be 7% because people have to pay ordinary income, right? Taxes. So if it's 30% bracket, at 10%, you gave 3% already to Uncle Sam. Now your net is only 7. So we have figured out a model where people will make 10% yield per year, or 11 or 12, but we'll give the, depreciation on top of it, so that you can reduce your taxable income by that much amount passively, so that you will net out 10, not actually, it's like making 13%, right? So making 13, netting out 10, or getting 10 straight. And then I know it's a little bit complicated, but if anybody would like to know about this one, we've been researching, and it's really going to work out very well in our favor and our investors' favor, because lots of investors are retiring. So they say, Vinny, I don't want the upside in 3 to 7 years, or whatever these people are telling me. I don't know if I'll be even living at that time, how it is. So our model, I'm changing it to a yield. It's a hard pref. Hard pref means you will get that automatically every quarter, divided into 10 or 11 or 12%, but we are planning to even pay monthly. I just wanted to say, and it's going to be hospitality fund, because we are buying so many cash flowing hotels right now. It's right day one, it's going to cash flow. So the investors will also get their cash flow monthly paid out right after investment. So it's not, again, I do want to let you know it's for accredited investors only. So please reach out to us and get to know us and all, and then we'll talk about it.
Love it. Thank you for joining. It's exciting.
Thank you for joining. Yeah.
We're always making progress. That's the thing about you and I, Vinny, is that we're always moving forward.
Yes.
And I think that's important for everybody to do. Just move forward every day. Part of the reasons Vinny and I do this, we love giving back, but also it keeps us accountable to each other, because we're like, hey, what did you say you're doing? Okay, I'm doing this. And we can watch each other progress over years, over years, over years. And it's not really rocket science at the end of the day to get better. If you practice whatever your craft is every single day, you get better over time. Even if you're not, even if I wasn't designed to be a basketball player, but I just practice every day, I'm going to get better at shooting the ball. So what Kolbe says is stay in your lane and do what you're good at. And that's what I needed to hear this last week. So I'm going to continue doing what I'm good at. But whatever that is for you guys out there, get in the game, real estate, business ownership, investments, tax strategy. This is all stuff you should be learning. This is the most important thing to learn, so then you can provide legacy for your family, which we're all trying to do, right? Provide a better life for our family. That's
so true. And Beau, we'll leave with the thought that real estate is one thing which has a leverage. What is leverage? You bring down 30% down payment or 40%, whatever, and then bank comes along, lender from Beau and other, they say, we'll give you 60%, we'll give you 70%. But guess what? They give that loan, but when you sell the asset or refi and take the equity out, they just want their balance of the loan back. That's all. No sharing of the equity gain. In stock market, where a lot of people are in stock market, as in with the ups and downs happening right now, you have to buy the stock full price unless you use margin or do puts and calls and all that, which is very complicated. And I don't do that. But the key thing is real estate is the asset which gives you depreciation, cost segregation, 1031, and you could do self-directed retirement plans to invest in them. And the leverage. Leverage is the number one thing, because you could really be putting 30% down, but you are buying asset 3 times that big. So you might be putting only 100,000, but you're controlling 300,000. If it's 25% down, you're controlling 400,000 asset, and the growth of that appreciation is going to be on the 400,000, which will be much higher than your 100,000. So, thanks again for joining, and it's such a pleasure to come to you, brother. Take care, and Beau, yeah.
Love it. Good episode. We'll see you guys soon.
Wow, what an incredible conversation today. I hope you got tons of value from this episode. If you did, don't forget to subscribe, leave a 5-star review, and follow me on social media to stay updated on all the things real estate, investing, abundance mindset, and wealth creation. If you're an accredited investor looking for exclusive investment opportunities, be sure to join our elite Monil Investors Club at vinnychopra.com/invest, where we share details of our future projects. Quick disclaimer, we are not selling any securities, and this podcast is strictly for educational and information purposes only. The opinions shared by our guests are their own and should not be considered financial or investment advice. Always do your own due diligence and consult with a financial professional before making any investment decisions. Thank you again for tuning in. Until next time, keep smiling, keep investing, and keep making a massive impact. God bless you. Beau and I are together to really bring the best to get your business to the next level.
Do me a favor, subscribe and share. I really appreciate it, and I look forward to connecting with you in the future.